right, so the first thing we are going to talk about is what? Trend line strategy. Okay, trend line. The second thing we are going to talk about is retest. Okay. The fourth thing we are going to talk, the third thing we are going to talk about is time frame. You have been asking me time frame. Okay. The fourth thing we are going to talk about is how to set stop loss and stop loss, take profit. All right. These are the things we are going to talk about today. So these are the four things we are going to talk about today. Okay. And hopefully time is going to permit us to complete the whole section, the whole topics. Right. Yeah. First of all, we are going to talk about trend line. All right. A support zone is where the price touches twice, okay, all right, below and refuse to push down, okay. And the resistance zone is where the price touches twice above and refuse to what? To push up, all right. In other words, a resistance zone is where the seller steps in, all right, and the support zone is where the buyer steps in, okay. Now you can support zone below, okay. You can find a support zone in a horizontal level, okay. When the price touches a certain zone in the horizontal level 2 or more times, it is your support zone, okay. And when the price touches a certain zone, the same thing in a horizontal level at the top, okay, it is your what? Resistance zone, all right. This is what we spoke about yesterday, okay. All right, 2 or more times, it is your resistance zone, okay. These things, okay, can also be found in a trend line, okay. Trend line is not different than support and resistance. It's the same concept, okay, the same concept. But in this situation, you have to find the support and resistance at an inclined level, okay, either like this or like this, okay. This situation, you have to find it in an inclined level. When it comes to support and resistance, you have to find it in a horizontal what? Level. All right. I hope you now in a support and resistance strategy, okay, you see the touches on a horizontal level. Okay. The only difference between support and resistance and trend line is the horizontal and an incline. That's the only difference. All right. Okay. The support or resistance, you see them in a horizontal level, but on a trend line, you see them on an incline level. In other words, if the price touches a certain zone, okay, 2 or more times in an incline level, you are getting what? Your trend line. Okay? So you can get a support trend line and a resistance trend line, depending on where the market is touching. All right? That support and resistance always has to be horizontal. Yes, support and resistance has to be horizontal. Okay. You can find a support and resistance at an inclined line, but the name is different. You can call it what? Trend line. All right. The name it's just the name. Okay. If you find it on an inclined level, it is support and resistance, but you don't name it support and resistance. You name it what? Trend line. Okay, that's the only difference. We said when the price touches a certain zone, okay, 2 or more times, we can label that zone as support or resistance, okay? The same way, when the price touches a certain level 2 or more times in an inclined level, you can call it what? Trend line, okay? So assuming the price is going this way, comes this way, okay, uptrend, all right? Okay, all right? This is an uptrend, all right? Now, you find your buyers entering from this zone, buyers entering from this zone, and buyers entering from this zone. Okay, so in the same zone, inclined way, the market has touched that zone 2 and more times. Okay, so what you are going to do is to draw your zone, okay, or your line to identify that zone. So now what you are going to do is to identify the zone, okay, and draw your line, okay, to mark it. In a support zone, this is a trend line support, okay. This, you can call it a trend line support, all right. In a normal support, you find the support in a horizontal level like this, but this time around you see the support in an incline level, okay, and you have how to trade them as well. The same thing, you can use the concept of what support and resistance to trade this, all right. You can use the concept of support and resistance to trade this. So in a trend line, put it in your mind that you need to find the touches on an incline zone, okay. So let's say you can also find what a bearish trend line, okay. The same thing, you can see the market pushing down this way, this way, this way, okay. Now you see the touches at the top, okay, the touches at the top, all right. So this one is what resistance trend line, okay. This is a resistance, but it's an incline level or bearish trend line, okay. The market touches it at the zone, comes down, touches it, comes down, touches it, comes down, all right. So this is an incline what resistance. With this concept or with this understanding, we are going to see how to trade trend line. Trust me, trend line, support and resistance, they cut across every strategy, right? They cut across every strategy, because before you get your start, that is why most people have not been consistent in this field. Why? Because the moment they learn trend line, learn support and resistance, at the end of the day, when they get to the advanced level, understand ICT concept, SMC, then they forget about these things, okay. They forget about support and resistance, they forget about these things, all right. Meanwhile, these things, okay, or these strategies plays a major role, all right, in those advanced strategies, okay. In fact, they are the foundation of those advanced strategies, all right. So you have this, okay. Now you have rejection, second rejection, and third rejection. So what you have to do, you have to draw your line or your zone, okay. This is a zone, this is not a line, right? So put it in mind, this is a zone, not a line, okay. So you draw either your line or your zone, okay. Now, after you have identified your zone, okay, what you need to do is to wait for the price to come back to the zone, all right. After price coming back to the zone, you need to check the candlestick formation around the zone, okay. What is the candlestick saying around that zone? The same thing like support and resistance, okay. You need to wait. After identify your zone, you need to wait till the price gets to the zone, all right. This is your key area, right? So when the price is coming back to your zone, the candlestick that is going to form here is going to determine whether you are going to go for buy or wait, okay. This zone is very much important. The candlestick that forms there will determine your decision, okay. So, and we have also learned about candlestick formation, all right. You know about candlestick formation. So what are the types of bullish candlestick formation that you know? If you find any of those candlestick here or formation here, that is going to be your decision. If you don't see them, you don't take any decision, all right. Morning star, someone says morning star. Bullish engulfing, very good. The three white soldiers, bullish engulfing, very good. I like how you guys are responding. So those are the things or your confirmation you need to see here. Once you don't see them, you don't take decision or you don't do anything around the zone, okay. If you don't see them here, you don't do anything, right? So assuming you see bullish engulfing here, okay, you see bullish engulfing here, okay. If you see bullish engulfing here, what this tells you is that the price has a higher potential of what pushing to the upside. So what do? You enter for buy, okay, or you enter for long. Someone says dodgy, right? Let's say the price gets to this level and you see what rejections, okay, candlestick rejections, all right. You see wicks, long wicks. you see long ways, okay? What this tells you is that the buyers are very much stronger at this level, okay? And they are trying their best to prevent the price from breaking the trend line, okay? So buyers are pushing, okay? They are pushing the price, okay? So if you see much rejections here or dodgy candlesticks here, it tells you the buyers are much stronger. So it has a higher probability of pushing the price upward, okay? Dragonfly dodgy, yeah, okay? But one thing you need to also understand is that the price, okay, when the price is getting to your point of interest, you need to check the momentum of the candle. Okay, if I say momentum, I mean the energy of the candle or the movement of the candle. Okay, is the candlestick reducing in sizes? Okay, or is it coming with a very high momentum? Remember, I told you a momentum candle is a candlestick that has little to no wick. Okay, it's a large candle with a little to no wick. A form of candlestick like this can be termed as a momentum candle. Okay, this candle has little wicks but very large, right? It shows you that the candlestick has what? Much energy. Anytime you see this candlestick at your point of interest, you need to hold on. Okay, if you see this at your point of interest, you need to hold on because it shows how strong the candlestick is. Okay, or how strong the sellers are. From this zone, the sellers are here. Okay. Oh, I don't think the screens, you're seeing the screen. So at the top, you have the sellers here. All right. You have the sellers here. So anytime you see a candlestick like this approaching your point of interest, you need to be very, very careful. Okay. Stay calm. Wait till you see your last confirmation. A wick is very much important when you see them here. Okay. A wick simply means that there's much rejection. Okay. So let's say you have candlestick like this and you have a wick like this. Right. What this tells you is that okay, and the buyers push the price all the way back. Okay, right? They push it all the way back and left this zone. So it tells you that the buyers are much stronger. If this is clear, we are going to do the bearish one. Okay, then we proceed. We have bearish trend. Okay, bearish trend, bearish trend. All right. Okay, so this is bearish. The trend is bearish. Okay, and the market is creating what? From in bearish, we say the market is creating what? Lower highs and lower lows. All right, lower highs and lower lows, lower highs and lower lows. All right, so you find your key zone. Okay, remember when the price touches there twice, it is called you can draw your what? Your trend line or your support zone or resistance, right? But if it touches there thrice, it shows how strong that zone is. Okay, the third touch shows when it bounced back third time, it shows how strong that zone is, both support and resistance and what? Trend line. Okay. All right. So after you identify your zone, okay, draw your line. All right, draw your line. Okay. After drawing your line, what you need to do, you wait for the price to come back to your zone. Okay. Come back to your zone. If the price approaches your zone or gets your zone, wait for your candlestick formation. Okay, your bearish candlestick formation. All right, wait for it to form around this zone. Once it forms around this zone, then you can what? Execute your trade, or you can enter for sell or short. After seeing your entry or your candlestick formation around this zone, you enter. Okay, you execute. All right. So in the comment section, what are the candlestick formation you need to see here? Bearish candlestick formation that you need to see here in order for you to enter for short. Wait to see the candlestick formation around the zone. Your key areas is one confirmation. We have gravestone doji, SK. Gravestone doji, yeah, we have evening star. Okay. Bearish engulfing. Yeah. Okay. Yeah. Engulfing, bearish engulfing. Good. Good. So you need to see those formation here. Okay. Can see something like this. If you see three what? consecutive bearish candles, then it shows you that the price has a higher momentum. Okay, it's gathering momentum to push more down. All right, you can see bullish engulfing. Okay, a bearish engulfing rather. Sorry, you can see bearish engulfing. Okay, bearish engulfing. All right, you can see something like this at your zone. We are going to look at all that in the chart or on the chart. Okay, you need to be actually patient. Patience is the key, right? You don't have to be hopping in because you need money or you want to make money or you want to make profit. All right, wait, get your area of value or your key area. Wait for your confirmation candle to what to set up before you strike. Okay, having understand this, okay, we are going to talk about retest strategy. Okay, retest. All right, having understand this, we are going to talk about retest. Okay, retest. After that, we are going to go on the chart. Okay, retest strategy. Now, retest strategy, you can apply it on support and resistance. You can apply it on trend line. All right, very much interesting. Okay, retest strategy is one of the strategies that you can use. You can apply it on support and resistance or a trend line. Very much interesting strategy. Okay, now what do you mean by retest? Okay, so for example, let me cite an example. Let's say for example, I don't know where you guys are from. Okay, but for my side, whenever childhood, let me use the example. Okay, my childhood time. Okay, we used to fight a lot. Okay, we used to fight to test our strength. Okay, we fight to test our strength. So if someone have been beating you a lot, okay, anytime you fight with the person, if the person beats you and one day you are able to beat the person, okay, one day you are able to beat the person, anytime the person misbehave, you tell him, bro, be careful, I'm going to beat you. If you joke, even though you've been able to beat the person once, okay, but you tell him, okay, bro, be careful, I'll beat you, or you'll be forced to go and test your strength again on the same person. Okay, Vicky Blue from Ghana. Double tap the screen. Okay, the same thing applies here. Okay, I'm going to show you. All right, whenever the price breaks a strong or a key area, right, the price is forced to come back to test the zone, whether the zone is still valid or not, or whether the zone is still strong or not. Okay, whenever the price breaks a key area or an area of value, the price is forced to come back to test the zone to see whether it can beat it again or not. All right, so let's say we have our support zone. Okay, let's say we have something like this. Okay, let me use bullish. Okay, we have something like this. Right, now we have our support zone drawn. Okay, all right, we have our support zone drawn. Now this support zone is our area of value, okay, or our point of interest. Okay, this zone is our point of interest. In other words, is what demand zone. Okay, so if the price comes back, okay, now if you are trading support and resistance zone and the price is coming back to this zone, what do you expect? You are expecting the price to react towards this area, okay, give you your confirmation, entry confirmation, and enter for long. All right, but sometimes, or if it breaks it, okay, when the price gets here, when the price gets to this level and break it, okay, and break this zone with a body, okay, when the price gets to this level, your key area, and breaks and close the key area with a body, now we have our market shift here, market structure shift or change of character. Definitely you are going to see it, okay, as we go. We are going to do more about this, okay, or change of character. All right, you see it here. Okay, change of character tells you that the price of market structure have shifted. All right, or there's a directional change. Okay, so now the price don't usually go straight to the downside. Okay, once the price breaks a key area, the price don't usually go straight. It will be forced to come back to retest the zone to see whether it is still strong. Okay, now for example, the buyers beat the price here, they fought the price, and they defeated the price here. It came back again, the buyers defeated the price again, this zone. Okay, now it came back again, the buyers defeated it. Okay, they defeated the sellers this zone again. They went out the way to this side, they came back, and the sellers defeated the buyers, okay, by breaking the zone. All right, after breaking the zone for the first time, they will be forced to come back to retest the zone to see whether it's still strong. All right, and in most cases, when it comes back to test this zone, because these zones, these people are strong and they have the experience of beating you, okay, they have the experience of defeating you. Most of the cases, it will defeat you. Okay, they will push you back here. They push the sellers, the buyers back. So now, this support zone has been broken. Okay, once it is broken and closed below with a full body candle or a body, all right, the support zone turns into a resistance. Come back to fight the price when the price gets here. All right. So what do you do at this zone? What do you do? You cannot just enter because the market is retesting it. No. All right. First of all, what you need to check, you have to change your market structure shift. Okay. Has market changed character here? All right. Sometimes the break doesn't change character. If it doesn't change character, it doesn't mean that the price is going to go down. All right. Now, after this is confirmed, all right, wait for the retest zone. Okay. Once the price gets to retest zone, check your bullish candlestick formations. All right, your confirmation entries for bearish. Sorry. Okay, check your bearish candlestick formation around the zone. Once that is seen, then you make an entry. If that is not seen, you cannot make an entry. Okay. So this zone, what do you have to look for here? You need to look for bearish candlestick formation around this zone. So at this zone, you need to see what your bullish bearish candlestick formation around this zone. Okay. In other words, you need to see rejections. Okay. You need to see rejections. Okay. What do you have to see again? Bearish engulfing. Bearish engulfing. Okay. What do you have to see again? You can see what? Evening star. Okay, evening star. Retest is not for only bearish. Retest is for bullish and bearish. There's no single strategy. Every strategy has its bearish side and bullish side. Okay, but note this. All right. Sometimes, okay, you will not see at the retest zone. You will not see your strategy. You will not see your candlestick formation. All these things, you will not see them. Okay, sometimes you will not see them, or sometimes before you see it, it is the price has already left your zone. Okay, so what do? You wait for the price to break a structure. Okay, sorry. You wait for the price to break a structure, right? Now, there's change of character here. If you don't see your entry confirmation around this zone, have patience, wait for the price to break a structure. Okay? Break a structure from this level. Once this break of structure is done, okay, BOS is done, it is confirming bearish. All right? It is confirming bearish. So you wait for market to retest the zone, break of structure zone, then you enter from this level. Okay? Enter for this level, from this level, and target what? Okay, so we are going to look at the bearish side. Okay, bearish side when the market breaks what? A very strong resistance. Okay, After that, we are going to look at trend line when the market breaks it, both bearish trend line and bullish trend line, right? After that, we are going to talk about time frame and stop losses, okay? Stop loss and take profit, okay? So let's proceed. We are going to look at for what? Our bearish, okay? We have, let's say, market touches twice. Let's use this way. Delete. Okay. We have market moving in a bearish direction. Touch it. 1, 2, 3. Okay. Third time, push it. Touch it for the fourth time. All right. So where do we identify our area of value or our key area? Okay, this is going to be the first touch, second touch, and third touch. All right. So this is going to be our key area or our point of interest. Okay, or the resistance level. Okay, so this is our resistance level. So now our price is at this level. What do? We need to wait for the price to come back to the zone. Okay. All right. Price to come back to the zone. So in case the price breaks it, okay, to the upside, right? Remember here, the price needs to break it with a body, not a wick, okay? If the wick is long and the body closes below this support zone, this resistance zone, it is not a break of structure or change of character, okay? It's not a change of character or or market shift, okay? All right, we are going to do that on the chart. Okay, once the price breaks this with a full body or a body, what you need to do is to wait for the retest, okay? Market to come back to your zone, okay? So when the market comes back, this resistance level, okay, this resistance here, they will come back here to form what? A support, okay? They will come back here to form a support to fight the price here, okay? In other words, to prevent the price from moving down. All right. So at this point, what you need to watch out for is your bullish candlestick formations. All right. Your bullish candlestick formation, that is the most important thing you need to look for that side. Okay. So what do you look for? Bullish engulfing. In the comment section, write it in the comment section. Okay. Write it. Once I see it, I'm going to write it here. So you need to look for your bullish candlestick formation around this zone. Okay. So one, bullish engulfing. Another. Okay, we have bullish engulfing, right? Bullish engulfing. Bullish harami. Bullish harami. Bullish harami. Okay. Harami. Shooting star. Okay. You need to look for shooting star. We have hammer. Okay. We have hammer. What else? A lot of them. Okay. Once you see this candlestick formation around this zone, what do? You enter for buy or you enter for long. All right. You enter for buy. So you need to see your candlestick formation around this zone. Okay. Once you see them bullish candlestick formation, then you enter for long or buy. Okay. Sometimes you might not see them here. Okay, you might not see your candlestick formation there, right? And then the market will bounce back. Okay, it will reject from this zone, begin to push up. All right. Where do you enter when you didn't see your candlestick formation here? You need to wait for the price to create a break of structure. Remember, from here we have our change of character or market structure shift. Okay, once the market breaks a strong support or resistance zone, we definitely will get what? Market shift, market structure shift. Okay, market structure shift or change of character. All right, change of character. Okay, and this I have already told you the meaning. Okay, whenever you see a change of character, market is telling you that it is reversing to the opposite direction. Okay, market structure shift or change of character, it tells you that the market is reversing to the opposite direction. All right, but it is not guaranteed that it's going to reverse. All right, until you see a break of structure. All right, the next break of structure will guarantee this change of character. Okay, So the break of structure, if you see the break of structure around this zone, okay, break of structure, BOS, then the market is telling you that now I am about to push to the opposite direction indeed. Okay, so what do? You wait for the price to come back to the break of structure zone. Okay, retest the break of structure zone, then you enter. Okay, begin to push to the upside. All right, let's talk about trend line. Okay, trend line, break and retest. Okay, trend line, retest. Okay, so we have market in the bullish direction, touches several times. Okay, this is your rejection area, rejection area, rejection area. So this is your key area. What do? You draw your line around the zone. Okay, okay, you draw your line around the zone. Okay, to mark your point of interest. All right, once the price breaks it, remember I told you the first one, the first entry, you can wait for the price here. When it gives you your entry confirmation, you enter. But in a situation whereby the price breaks it, okay, whereby the price breaks it, you need to wait for the what? The break of what do you call it? Retest. All right, you need to wait for the retest. Okay, but note this, right? The market is creating higher highs and higher lows, right? Higher highs and higher lows. It's very much important, okay? Higher highs and higher lows. All right? If the market is in uptrend, under no circumstance should the market break this previous higher low. Okay? If the market is in uptrend, okay? Under no circumstance should the market break this. Once the market breaks it, okay, giving you a change of character or market structure shift or change of character, it tells you the market is about to reverse to the opposite direction. Okay, now the current direction is what? Uptrend. But if the market gives you a change of character here, all right, it tells you the market is about to reverse to the opposite direction. And what is the opposite direction? To bearish side or down. Okay, all right, but you do not enter from here. You don't have to enter just because you've seen what? Market structure shift or change of character. Right, you need to see other confluences or other what confirmation. All right, so wait for the price to come back to the retest zone. And I told you why retests do happen. Okay, I told you why retests do happen. Once the market, the buyers has been able to what? Defeat the sellers several times on this level. Okay, and the sellers were able to defeat for the first time, they would like to come back to test the strength of the what? Of the zone to see whether it is still strong or no. All right, and in most cases, okay, it's always what? Reject the price at the level. All right, so if you wait, you need to wait for it, the retest here. Okay, at the retest zone, then enter directly. Okay, you don't have to enter directly. You need to see your bearish candlestick formation at the retest zone. Okay, see your bearish candlestick formation at the retest zone. And what are the bearish? Evening star. Okay, you have evening star, bearish engulfing. Okay, you have bearish engulfing. Okay, 3, we have gravestone doji. All right, gravestone doji. All right, bearish hammer. Right, okay, you have bearish hammer. Okay, now all these candlestick formations, you need to see one of them here. Okay, you need to see one of them here in order for you to enter here for short position or sell position. Okay, once you don't see them, you don't trade. Once your confirmation is not clear, you don't trade. Okay, now your first confirmation is what? The trend line. Your second confirmation is the what? change of character here, all right, the change of character or market structure shift, all right, your third confirmation should be what? The candlestick around the zone. At least minimum have 3 confirmation, minimum 3 confirmation. So this zone, you need 3 at least. You need to see your confirmation around this zone, all right? So if you see your candlestick formation here, then you enter for short position or long position, bearish, okay? You enter for sell, all right, and target down, okay? You enter for sell and target down, all right? But in a situation whereby you don't see your entry formation here or your candlestick formation here, what do you have to do? You need to wait, okay? Wait till the price gives you a break of structure to the downside, okay? Right? So now we have what? Lower low here, okay? Market has broken the previous higher low, giving you a lower low here, okay? So we have a break of structure. Once this break of structure is given, okay, it tells you the market is what? It's moving to the downside. First, we have our change of character. Second, the market has given us lower low and broken a structure. What do you expect? Market is going down, okay? So it is very much important to know these things, market structure, how the market move, okay? Higher highs and higher lows and lower highs, all right? Understand break of structures and change of characters, all right? They will help you a lot to be able to find analysis very, very easy and simple. So if you see your change of character here, break of structure here, what do you have to do? You wait for the price to come back to retest the break of structure zone, then you enter from here, okay, and target down. All right, is it clear, guys? Is it clear? Is this clear? All this zone is a selling zone, okay? The price can break it to the upside, all right, but it doesn't usually happen, okay? It can happen, right? That's why no strategy gives you 100% winning accuracy, all right? It can actually happen, but it doesn't usually happen, all right? Okay, time frame, all right? Let's start from yearly time frame, okay? We have yearly time frame, we have monthly, we have weekly, we have daily time frame, we have hourly time frame, all right? Hour time frame, which, for example, we have is can start from 4 hours. Okay, we have 1 hour. Okay, we have let's go to 15 minutes. Okay, we have 5 minutes. Sorry, I have 5 minutes. We have 1 minute. We even have 1 second and 2 seconds. Okay, we have all of them. Okay, every minute you can see them there. Now, what you need to understand is that all these time frames, okay, all these time frames, you need to put the chart on these time frames, okay? You as a trader, you have to put the chart on these time frames, okay? And look for what you are looking for, or look for the things that are necessary there, all right? And what this means is that if you put your time frame on what? A yearly time frame, that means each of the candlesticks in that time frame, okay, will take the same time to complete its cycle. All right, understand this, okay? If you put your time frame on 1 year, it means each of the candlestick that pops up in 1 year time frame, okay, it will take the candle a year to complete its whole cycle. In other words, it will take a year for another candlestick to start a new cycle. All right? All right? Now, monthly time frame if you put your candlestick on monthly time frame or your chart on monthly time frame, it will take each of the candlestick, okay, to complete a cycle in 1 month. All right, that means if a candlestick starts its cycle, it has to take the candlestick 1 month before completing its cycle. Okay, so let's say we are in March. Okay, if you put your time frame on monthly time frame, this month the candlestick you see currently, it will take him the end of the month before another candle. If you put it on weekly time frame, the same thing. It will take 1 week before each of the candlestick will complete its cycle, or a new candlestick will pop up. All right. If you put it on daily, the same thing. If you put it on hourly, let's say 4 hour, 1 hour, 15 minutes, 5 minutes, or 1 minute, that means it's going to take these candlesticks, okay, these time frames, in order for them to complete their cycle. So if you put your candlestick or your chart on 1 minute, it's going to take 1 minute for another candlestick to pop up. And if that candlestick pops up, it's going to take him 1 minute for it to complete the cycle for another candlestick to start. All right. So understand, you have to put it on this, okay? And we have a reason to put it on them. All right. To put your chart on a time frame, you need to have a reason. All right, and the reason is what we are going to talk about. Okay, the reason is what we are going to talk about. The reason is what we are going to talk about now. So pay attention. Let's talk about the reason. Now, the higher time frame is considered to be what? The higher time frame is considered to be, from here, okay? So let's see, daily time frame, okay? Sometimes 4-hour time frame you can call it a higher time frame, but let's use this time frame from yearly, monthly, weekly, and daily. Those are the higher time frames. And what do you look for at the higher time frame? You look for what? The overall direction of the market. Okay? You look for overall direction of the market. Okay? In the higher time frame. So direction of the market means, is the market moving up? Is it moving down? Or is it consolidating? Okay? Is it in a stable ground? Okay? That is what you look for in the higher time frame. All right. Personally, what I do on weekends before I start my week, okay, I need to check the monthly time frame, weekly time frame, and daily time frame to see what actually happened there. I don't go into yearly time frame. Okay. Now, this is the most interesting part. How do you see the direction of the market with this? Okay. I believe that most people has been in a flight before. All right. So now, I'm going to make the difference between the higher time frame and the lower time frame. Watch this. Okay. Now, if you are in a flight, okay, especially when you are in the what do you call it? Is it window or the glass side? Okay. And the flight is in the air. How do you see the ground? How do you see the ground? Okay, in the comment section, how do you see it? So if you're in the window side, okay, you can see, let's say in Dubai here, okay, if you are landing, if you're in the air, you see the ground, you can see the layout. Someone said layout. You can see the layout, okay, the layout of the country or the city. All right, when you are in the flight, all right, the same thing. But you cannot know the roads. Okay, you cannot even see Burj Khalifa. Okay, and you will not know the road to Burj Khalifa if you are in the air. All right, you will not know the road to Burj Khalifa. You will not know Sheikh Zayed Road. You don't know the road, but what you see is the layout of the city. Okay, the same thing. When you tune your time frame into the higher time frame, you see the layout of the chart. Okay, you see the overall layout and the trend of the chart. Okay, but to see the road, okay, to see everything that is going on in the road, you need to what? Come down to the lower time frame, or you need to descend to what? To the lower time frame. All right. Just like you in the flight. If you're in the flight, you see the layout. You don't see the roads until you are down. That's when you see this is the road to what? Burj Khalifa. This is the road to what do you call it? Palm Jumeirah. Marina, this is the road, this is Sheikh Zayed Road. Okay, it is when you get down that's when you see it. But if you're in the air, you don't see those things. You just see the layout. The same thing when you are in the, if you tune your time frame to what? To the higher time frame, like yearly time frame, monthly time frame, weekly time frame, daily time frame, you see the overall trend of the market. Okay, the shape of the market. Is the market moving up? Is it moving down? Or is it consolidating? All right. All right. But if you descend to the lower time frame, that is where you begin to see the price actions. You begin to see the trend lines. You begin to see this price candlestick formations and everything. Okay, what is actually happening inside there? All right. I hope you understand the difference between the higher time frame and the lower time frames. So if you want to see the overall trend where the market is moving to, where do you put your time frame? You put it on the higher time frame to see the trend of the market. Okay, and if you want to make analysis to make an entry, what do? You put your time frame in the lower time frames. Okay, all right, and guess this, understand this. After seeing the overall trend of the market, whether the market is in the bullish direction, bearish direction, or consolidating, your bias should be towards the higher time frame, what you saw in the higher time frame. Okay, your bias should be what you saw under the higher time frame or on the higher time frame. So after seeing that the higher time frame is bullish, okay, which is upside, okay, if you are descending into the lower time frame, what you should be looking for is buys, not sell, because the higher time frame is telling you that the price is moving up. So if you descend in the lower time frame, you don't have to be looking for sell. What you need to be looking for is buy to follow the trend of the market. After seeing the direction of the higher time frame, like the daily time frame, weekly time frame, monthly time frame, now if you descend into the 4-hour time frame, 1-hour time frame, 15-minute time frame, 5-minute time frame, what you need to be looking out for is the bias of the higher time frame. Okay, if you go contrary to the bias of the higher time frame, most of the cases your trade is going to go against you. Okay, so now you can mark support and resistance zone on the daily time frame, okay, on the weekly time frame, or in the 4-hour time frame, depending on the type of trader you are. Okay, depending on the type of trader you are, that is where if you are a position trader, okay, you are a swing trader, you need to mark your support and resistance in the weekly time frame and daily time frame. Okay, all right. Okay, if you're a position trader means that you are going to hold the trade for long. Okay, you are going to hold the trade for weeks and months. Okay, years. Right, that means you are a position trader. All right, if you are a swing trader, it means you are going to hold the trade for days. Okay, for days. So you need a very strong support and resistance zone in order for you to what? Execute the trade. All right, if you are an intraday trader, what you need to be looking out for, your support and resistance zone and a trend line should be based on 4-hour. Okay, day trader, you are intraday trader. Intraday trader means that someone that takes trade in a day. Okay, it takes close and close in a day. Okay, it doesn't like 24. It doesn't hold the trade for 24 hours. Okay, it doesn't hold the trade for 24 hours. Okay, as a scalper, you need to be looking for your support and resistance at 1 hour, 15 minutes, or even 5 minutes. Okay, zone as a scalper. Okay, 1 hour support and resistance. Your confirmation should be, as a scalper, your confirmation should be from 5 minutes, 1 minute, or 15 minutes. Okay, a scalper is someone that holds the trade for like a minute, 30 seconds, or even 2 minutes, 5 minutes. He's done. Okay, and he's out. A scalper can enter into the market for like 15 times in 5 minutes, or 20 times in 5 minutes. Okay, that's a scalper, right? So the time frame, how to use the time frame depends on the kind of trader you are. Okay, and what you are looking for in the market. Are you looking to buy to hold the trade for days? Are you looking to hold the trade for hours? Are you looking to hold the trade for months? Okay, so that is going to determine the kind of time frame that